G'day traders, Stacy Burke from Stacy Burke Trading, and today we're going to be going over using some different patterns, trend lines, and the opening range on your end of day charts. Just a couple of really simple key concepts that we've sort of touched on in the other videos, but we're just going to look at and highlight a few things over the last couple of months and how simple some of the end of day trading can be. So basically, end of day trading is referring to New York closing prices. So 5 p.m. New York time on the currencies is the 5 a.m. Rollover time where we're at in Perth, Western Australia, but that's the closing time for the end of day currency charts. And one of the things we've touched on in the other videos is the opening range, or the first bar of the month. So these dotted lines, we'll just put a blank chart on here. So these dotted lines are the first bar of the month, and I'll just we're just looking at the last few months. So we're into the first week of June, today being the 9th of June, and I'll just highlight these first bars of the month, and then we'll talk about the opening range, and then a couple of simple things, some simple steps that you can do to sort of give yourself a real solid framework in terms of positioning yourself potentially in the direction of a strong move, or in the direction of a move. So as we touched on earlier, the opening range, the first bar of the month, and sometimes the first couple of bars of the month, in a large majority of the time, 80% or more, will often be one of the highs or lows for the month. Now, just looking at the last few months, we can see clearly that for the month of February, that the first bar was definitely the high of the month. The second month on March on this chart, that was the high of that bar was the top of the range. So not the extreme, but again, what we're looking at is it's setting up an area of potentially where the selling extreme will take place, or the buying extreme. So again, March and April, the first bar high of the month, and then we get down to May, and that first two bars was the formed a pin bar. So we had that first bar was the opening range, but it took the two bars in this particular case to form the extreme. So we'd call that the initial balance. And that indeed was the low for the month, and now we're into June, and that first bar so far has been the high of the month. Now, one of the things that, if you've read Edwards and McGee or Schaubacher, just in terms of the 4 or 5 main reversal patterns, but also just basically symmetrical triangles, rectangles, the use of just some medium-term trend lines, you can start to get an idea potentially of where the market is starting to consolidate, and potentially getting ready to make a move, especially into the rollover time of the month. Excuse me. Now, why is that time so important? To be honest, I don't really know, but I do know that banks, institutions, large funds will tend to close their books and book profits or book losses if they have them, and roll new money into positions right away. A lot of new money goes into super funds and retirement savings plans and is invested at the beginning of the month again. There's options expiries, there's a new economic calendar that comes out, so there's a lot of various reasons potentially why the markets do what they do. That's not really my area of expertise or knowledge, but I'm more interested in the fact that they move, and that gives us opportunities as traders to potentially look for areas where we can trade those markets. So let's take a look at these micro trend lines and any other types of shapes or positions that we can find on these markets. So again, just going back, we'll clear this chart again, and then we'll just look as I go into the end of the month. When that last day of the month prints, I automatically want to be drawing some line of momentum, micro trend line, or shape. So if there's a rectangle, a flag, a pennant, a head and shoulders, whatever it is that we're looking for, we want to see it. Now, for the purposes of this video, I'm not going to go out to longer time frames, but I will do the same on a weekly chart, and I will look for patterns over 8, 10, 12 weeks. Why is that? Well, I've been following different people and learning from some of my mentors, something that they do. And again, going back to Edwards and McGee, Schaubacher, Peter Brandt's work, there's some real great opportunities when the market has made a move and then consolidates over that larger time frame. These moves can tend to be fairly explosive when they do break out of those patterns and they conclude those shapes. So again, just going into the end of the month, the last day of the month, I would look for some indication of two areas where I can draw a line. So in this particular case, as we have the first day of the month, again, we've got a very dynamic, strong move. We micro trend line break and a retest of that low that's failed, but I'd be very reluctant to be trading against that trend. So until we get the second day of the month, at that point we really don't have any other area to connect that to. Again, just to make that simpler, when that first bar of the month does print, what I would do is immediately go across from that high, and I would be identifying a bar where the market has broken out from. So if I was to take a position anywhere, we'll just draw a little, anywhere up in this area, this would be my bar where my maximum stop would be. So as we head into the end of the month again, now obviously we've got maybe a couple of points that we can use as a level of buying, but also now we can connect these lines as a potential either a wedge. It's not quite really a textbook perfect wedge, but we've definitely got a downtrend in place, and when this first bar presents, we've got a high probability situation of where the market will retest the lows where we know stops are, and we also have a micro trend line break that's gone into that move. So that was a fairly low risk, high probability trade of that market continuing. But again, no matter where you take that trade, it's always, in most cases, should only be that one bar risk. Again, as we head into the end of the month, we'll look at as the market traded and we go in towards the end of the month again. Got our horizontal support here. Just put this down a bit. And the market, just obviously on that first bar of the month, even if you were to trade that as a breakout, you wouldn't have got picked up. Breakout traders would have been picked up on the break of the second day's high. And again, there's an example of a one bar stop. And the reason why you want to be thinking in these sort of terms is that if you look at the monthly average true range, which for the Japanese yen, I don't have it in front of me, but I'm going to suggest maybe around 400 pips, somewhere in that area. You're looking at maybe risking 100 for maybe 300 to 400 gain. So again, it's one of those where the return on your risk is going to be greater, obviously, maybe at least 3 to 4 to 5 times to 1. So again, as we headed into the end of May, I would just look to be able to connect 2 points in the direction of the momentum. But after that first bar breaks that trend, and we can see the momentum was creeping into that high, I would have full confidence to be trading a break of that bar and placing my stop above the high. So again, just risking the one bar. We've got 3 legs going up. So again, we'll just draw 1, 2, 3 legs up. And that's what those are the kind of positions we want to see. And you can see it in the previous month, 1, 2, 3 thrusts against a strong trend. These are just examples of where those patterns going into the end of the month can possibly give you an opportunity to position yourself in the direction of the strong move. Now, we've just looked at the Japanese yen. Go and look at your own charts. Apply it to any other market you want. There's Brent crude. We'll just take a quick look at that. So there's the first bar of the month. Going into that, we had 3 thrusts. So if we were to take that last thrust up and we traded the break of that low as our entry, we've got 2 days out of that. But when the market has closed inside of the low of that previous range, the previous candle the day we've broken out, you'd want to be moving your stop to break even or taking profits. So again, that's something we've covered in one of our other videos, but we want to look for a strong move off the open. And if we see that hesitate, and whatever market you're trading, you need to learn to study that to see how consistent those moves are. But as soon as it reverses an opening bar, it's a very high probability that it will continue in the opposite direction. So there's example in April, example in May, and now in June we're still seeing that first bar hold, and we might be seeing a final flag in crude oil showing up as we speak. So just get in the habit of drawing your trend lines, keeping it simple. Go back, read Edwards and McGee, Schabacher, again Peter Brandt. There's 4 or 5 really common significant reversal patterns, but just start drawing your lines. You notice we didn't look at any indicators on here today. Start looking at your opening range traders, and stay disciplined, stay focused, apply your money management rules, and may the markets go with you. Hopefully you got some value out of today's video. But again, opening range and your trend lines, traders. Stick with your patterns. Study the markets that you're trading. Look for these 4 or 5 common things to keep showing up, and stay disciplined. Thanks, traders. Hi traders, it's Stacy Burke from Stacy Burke Trading. If you haven't done so, please head over to my website at stacyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.